Hello guys, how are you doing today? Today I am going to be teaching you about Fibonacci retracement levels, what it is and how to use it to analyze your chart. So stick right through the video, it is going to be an interesting one. Okay, so what are the key takeaways for Fibonacci retracement levels? Fibonacci retracement levels is an analytical tool that you can use to connect any 2 points that you see as relevant, typically a high and a low on a chart. And this fib level has percentage levels provided that indicates where price could stall or reverse. The most commonly used ratios are 23.6, 38.2, the 50%, 61.8, and 78.6 levels. But for the purpose of this video, I am going to be making use of my own edited Fibonacci retracement tool, which I only have three levels on it: the 0, the 0.5, and the 1 levels. I will show you how it works. So let's go. So right here, we have an uptrend on BTC. And for this uptrend, we cannot just dive into the video to buy because, as you can see, price has already moved out of this area. And now, the only relevant points that we have on this chart is this swing low and this swing high. So what I'm going to do is to pick out my Fibonacci retracement tool. I already have it on my favorite tool. But if you want to have your favorite Fibonacci retracement tool, you can pick it from this tab in your trading view and use alternate F to add it to your favorite tool. So the next thing I am going to do is to choose this swing low as my area of interest, click on it and drag it up to this swing high. You see, my Fibonacci retracement level is showing me 0, 0.5 and the 1 level. This area in red is the premium zone, and as you can see, it is above the 0.5 level, and this area is the best level to sell. And right here is the demand or the zone that is best to buy in. Okay, so what you have to do is to wait for price to return to your discount level in an uptrend for you to place a buy. And for this uptrend, we can see that the market structure is forming that of an uptrend because you can see that price already broke this low. Price broke this low and put up this swing high right here. Price broke this low and put up this swing high right here. Okay, and tapped into it and continued to go up. But the last bullish momentum that showed us that there are buyers in this market is this green candle that we are seeing here. So automatically, if you are familiar with your market structure, you should know that right here is the good level to buy. I have posted videos explaining the market structures that I have here. So if you are studying it and looking at it every day, you'll be conversant with seeing your order blocks and knowing that order blocks is the bullish order block is the last bearish candle before a momentum move like this one right here. So as you can see, we already have two confluences, or rather three, that price is going to tap into this region and continue to go up. Our first confluence is our Fibonacci retracement level, which is in discount zone right here. So we are definitely feeling safe to buy here. Our second confluence is the uptrend, because if you take your trend to and draw it from this swing low to this swing high, you will see that we are in an uptrend, and our third confluence is our bullish order block. So we'll be placing a long position from this level and taking our stop loss right here, which is our strong low. Then we should be targeting this swing high for our first target of profit, and maybe moving forward all the way up here. If the market is extremely bullish, take out this high for a good risk reward trade. Okay, so this is basically how to use the Fibonacci retracement level in an uptrend. So I will quickly look for a downtrend to see if I will get okay, let's assume that let us take this back. Let us take this back. Imagine you were on this chart and you know that this is already a downtrend for BTC. How do you use your Fibonacci retracement tool to know the right place to enter so that you don't just jump into anywhere on this trend? What you have to do is to pull out your Fibonacci retracement tool, and the most relevant swing high and the swing low is what you are going to use as your point of references. Okay, so right here we have our fib level 2, and as you can see from the 0 to 0.5 level, 0 to 0.5 is our premium zone, and our 1 to 0.5 is our discount level. So what we have to do is to wait for price to dip into this level before we can buy, before we can sell, or rather. So all we have to do, if you are on this chart and you feel confident enough to sell from here, it's okay, but that would be a kind of an aggressive kind of entry, because there is a fair value gap to be filled even up to this level. So what we have to do is to wait for price to make a significant retracement to our premium level before we can be able to take a sell. Okay, someone could have sold from this level, because this level is enough retracement. This level is enough retracement into the premium zone. So you could have sold right there if you are an aggressive trader. And also some people may want to see the price come back again for another retracement before they will take another sell. So I don't know if price actually did get into that level, but that is basically how you will use your Fibonacci retracement level tool. Okay, just like this one. I will take this back again. I'll take this back. So if you were on this chart and you want to buy, okay, if you open your chart and you want to buy right here, you will see that the best way to decide, first of all, whether you are going to buy is to take out your fib tool and take this low and this high right here. As you can see, your trend is already in a premium zone, so you don't buy right here, you'll be making a whole lot of mistake. What you have to do is to wait for price to come within this 0.5 to 1 level before even thinking of pressing or clicking your buy button. Okay, so once you have marked it out, you will see that price will definitely respect your level and fall back into this zone. You have to be patient to see that price will actually dip into this zone, and when you make a buy, you'll be making a profitable trade. So there is no strict rule about using the Fibonacci retracement level, What you need to know is that when you are in an uptrend, you choose your Fibonacci retracement tool and click on the most relevant swing low and swing high, and wait for price to retrace to a favorable level, and so that your bias will work in your favor. Okay, so it is basically the retracement tool, which means once you draw, you wait for a retracement. Once you draw, you wait for a retracement before you'll be able to take your buy or your sell. Okay, so this is our retracement tool. Price dipped into this green zone, this level, before it started going up again for an uptrend. Okay, so that will be it for this video. I hope you enjoyed it. If you have any questions, you can drop it in the comment section so that I will attend to you as quick as possible. Thank you very much for listening.